Is the stock market your main source of income? If you have less than 5 years of experience, then trust me, you are still not fully aware of how market actually behaves. It is very easy to pick stock market as your full-time career when the market is bullish. But your plans soon start failing when the market goes into a long recession, like 6 months or 1 year or even more. Because nobody is able to earn during that period. This video will show you exactly how to survive market slowdowns. Steps even paid courses don't teach. So don't skip this. Stock market moves in cycles. There are only three possibilities in the market. Either it is bullish or bearish or the market is just resting. If you believe this, then trust me, the same thing will continue for the next 200 years as well. Stock market will never end and it will never keep doing just one thing forever. Working in the stock market, being passionate and active is one thing, but being a professional or a specialist is different thing. Professionals, specialists, or people whose family business is the stock market knows how to survive in this line of work. They understand the plus and minus of this business. Anyone doing any kind of work has to do whatever it is needed to survive. Likewise, stock market is also a serious business, so treat it like it really is. A proper businessman who works in any line of business, for example trading some XYZ product, knows that it does not sell continuously for all 12 months. So when his main product slows down or faces a downturn, he looks for similar product in his line of work, uses his mind smartly and somehow manages to make money. A businessman sitting in the same place uses his mind in many ways, combining high margin and low margin products, fast selling and slow selling items. No single product earns him all the money. It is the entire combination that keeps the business running and sustainable. Business is all about setting. And it is not like you will suddenly make a deal of selling airplanes while you are in the business of selling some small XYZ product. You stick to substitute items within your own line of expertise. Similarly, when the stock market loses its charm, there are other assets that perform. People have limited money and it keeps circulating among different asset classes. As a professional, you should take advantage of how this money flow works to maintain the overall system of the stock market as a serious and rewarding business. Here we are not talking about a small 1 month market slowdown. We are talking about a long bear market. In such times, you need to look at other asset classes like gold and silver ETFs, debt funds, and REITs. The process of investing and exiting is just like the stock market. If you go by the theory, you will find other asset classes also. But I have put only those asset classes which I find truly powerful and practically executable. When the stock market falls or stops performing, these are the asset classes that usually take the lead. Now, if we go strictly by the theory, these asset classes should ideally move opposite to Nifty, meaning investors wouldn't even need to think much. Just invest and relax. But that's not how it works in reality. What really matters is why the market is falling or why it isn't performing. There is always a specific factor that plays the biggest role in keeping the market under pressure. It could be tariff news from the West, interest rate changes, developments in global economy, or the directional behavior of the dollar. You need to identify that reason to know which factors have turned favorable for a particular asset class. Because whenever there is long-term uncertainty, let's say for 6 months or so, not all substitute asset classes perform. Usually, one of them becomes the star performer. Every asset class has its own favorite factor that drives its performance. No one can catch the exact top or bottom of any market. But someone with good experience can sense within a couple of months that the market won't perform well for some time by analyzing charts, fundamentals, and the news with potential long term impact. If you notice other asset classes is starting to perform during that period, it gives you extra confirmation. In that situation, plan your funds and invest in that particular asset class for a few months. Once the stock market shows signs of reversal, exit that investment. Even in the worst case scenario, when your timing isn't perfect, you will still earn returns far better than earning nothing or just 6% from an FD. This approach is especially logical if you view the stock market like a businessman. When you invest or trade in substitute asset classes, don't just keep looking at profits. Your own greed can ruin everything. Don't chase maximum returns. It can backfire. In the long run, your chances of winning are higher when you focus on the right process.